Thanks for joining, everyone. I'm Rob Tetrault from robtetrault.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tetrault Wealth Advisor Group. Thanks for joining. Really interesting guest I got on today. Last time he was on, he made a few bold predictions, and they pretty much all came true. He wrote a piece last week, about a week and a bit ago, and I emailed him when I saw the piece. I said, Javed, I want you back on the show. He's coming back. He's back on the show. Let's bring him in. Let's delay him no longer. A man who doesn't need introduction, but I will introduce him anyways. Javed Mirza, quantitative technical analyst and researcher from Canaccord Genuity Corporation. Welcome, Javed.
Perfect, Rob. Thanks so much for having me.
We talked about, I'm going to just go a little bit here. You talked about some thematic ideas here. I'm going to skip ahead here and get right into
probably page 7.
Yeah, page 7 here, where we talk about the S&P 500 right here, figure 5.
Yep.
So this is two charts. For those of you that are watching at home, the figure on the left is the S&P 500 weekly. This is a 3-year chart. And the figure on the right is the S&P 500. It's a daily chart for 9 months. Now, why at the bottom there's a ton of stuff, but you talk about MACD, you talk about SPX divided by VIX, and you talk about the price, and then you talk about buying, selling pressure. Do you mind taking us through those and why they matter for technical analysts?
100%. So what I'll focus on is the chart on the right-hand side for right now, but I don't want to overwhelm your viewers. But the key takeaway is if you take a look at the chart on the right-hand side, that's the daily chart of the S&P 500. So what you can see in the top panel, all that is price momentum. So it's telling you on whether the price momentum is moving higher, or exactly right there, Rob, or lower. And then right underneath that is another indicator called overbought or oversold. And what you can see is, you've had a pretty good run here. So it makes sense that you're starting to get a little bit overbought. And what that means, overbought, it's just you've had more stocks that are at near price extremes.
What's the specific measurement for overbought and oversold?
There's a wide variety of indicators. A common one is RSI, which we use as well, and it's
relative strength index.
Yeah, and it's just measuring the price of any financial instrument relative to itself over the last, I think it's typically 15 or 26 periods. But the key takeaway is it's just telling you that the index obviously has had a pretty good run. Now, what's interesting in the bottom panel is what that is an indicator. And you can see that black line that goes up and goes down. It's just an indicator of buying pressure. So it's very simple. It's one of the first things I learned when I first started doing technicals over 30 years ago. And what it is it's just if a stock closed up on a day, you add that indicator to a running total. And if a stock or financial instrument closed down, you subtract it. And the reason that's important is because you want to see this indicator increase over time, because what it's doing is it's showing you there's more buyers than sellers. So what you can see with that blue arrow is that this has continued to trend higher, which is positive.
We're talking the bottom,
the bottom arrow, exactly. Yeah, but what we said when we wrote this, and remember, we wrote this on Sunday, not this Sunday, but the previous week, and we said, look, here is important support. So I'm just looking at the middle panel there and just highlighting that blue shaded box, and that it was between 3,000 and 29.46. And so that's actually exactly where we came down to and where we're sitting around today. So all that we did over the previous 2 weeks was just basically we moved up quite parabolically, and then of course we had the big correction. So what you had happening in the first week of June was some FOMO, people with fear of missing out, and they were piling on. And then what you had last week was a retracement of that entire move, and you've come back to major support. And basically the last 2 weeks, it's as if they never happened. And now from our work, it suggests we're going to try and rally again and potentially push out to new all-time highs. And that's what you and I talked about when I was on here, I think about a month ago, is that we're going to hit new all-time highs. And we hit them on the NASDAQ last week.
Yeah, May 7th, 2020 is the last time you were on the show with us, just over a month and a bit ago. Yep. And you talked about hitting new all-time highs. And I remember I was like, new all-time highs? Javed, are you crazy? But no, you were right. As it turns out, your technical signs were strong. The NASDAQ did hit an all-time high, and we're continuing to see some of that right now. So I'm gonna go to the next. By the way, guys, if Javed, I can share this deck with our viewers, right? If they ask me for this,
I think could double check with our team, but yeah, I would just double check with them.
Yeah. So if you're hungry for this kind of data analysis, please reach out to either myself, send me an email, or Diego Guzman. Send it to rtetrault@cgf.com, and we'll get you the compliant friendly version of it. Let's go on to the next slide here. We're taking a look at the TSX composite. This is equities. Again, the 3-year and the 9 months. So you talked about support. What are you seeing here with respect to support? And maybe pause just a sec and explain to us what support is for a stock and resistance.
Okay.
I know for you it's second nature. But.
Yeah. So support is a level where historically the stock has a trouble moving. Sorry. Resistance, we'll start off with resistance, is an area where the stock traditionally has an issue moving through. And all that means is that from a fundamental perspective, so there's a variety of different people who are using different techniques and approaches in the market. So it's fundamental, it's technical, it's quantitative. And what all it's telling you is that that level, for whatever reason, is a common level that a lot of people agree on is important. And if it's a resistance level, it means that people are selling at that level. So let's say they're fundamental analysts. Their work is telling them that at this level, the stock is overvalued or fairly valued. Same thing from a quantitative perspective. And as technical analysts, we see the footprints that these other market participants leave, and we utilize them. And so what I would highlight here is you can see that 15,222 level. It was initially it was resistance. So if you notice back in early May, we tried to break above it, but we couldn't hold above it for more than a day. And then we just came back, and then you see that 14,270 level. I don't know if you can blow that up a bit, Rob, but yeah, we're exactly where your cursor is. No, where your cursor is fine.
Yeah. I'm trying.
And what happened is we tested that 15,222 level, then we came back to the 14,270, and support is the opposite. So it's a level where fundamental or quantitative investors find whatever financial instrument they're looking at is attractive or undervalued. So what's happened over the last couple of days is, lo and behold, is we've come right back to that 15,222 level on the TSX composite. So we had a pullback, we're right at that level again. And what you'll notice is that these levels, support or resistance, tend to become magnets over time. So let's say we're talking about a stock will trade to a resistance level, it'll fail there, and that's what's happening is fundamental investors think it's overvalued at that point. Then it'll pull back a bit under the weight of that selling pressure. And then if there's buyers who, for whatever reason, are looking out further and they see, like, on the stock you mentioned there, that a Shopify, that, they have some agreement with Walmart, that fundamentally changes the outlook, then you can see that things have changed once it breaks through that resistance level. So one of the things that we're looking for next is a break above the 16,000 level on the TSX. On the TSX, exactly.
So that was the last kind of resistance level. And if it break through to that, would likely, I think what you would say would push it to a next resistance of 16.9.
That's exactly it. Yep. And so what it's telling you is that, the fundamentals have changed, they've improved, and now we're pushing higher and heading higher. So all of this is really positive. I'm
going to try to zoom this in for some viewers here. So maybe I should go to, do you want to stop and touch on the NASDAQ here? And
sure.
I mean, it's largely the same, but what I'm going to try to zoom in here for a sec, but go ahead and tell us about the NASDAQ 100 here and what you're seeing.
So what I'll do is I'll talk about the weekly chart on this one, because I think this is more relevant because we've broken out to new all-time highs. So it's really positive. It's funny, you've heard that saying, buy low, sell high. Well, typically what we do from my field is we like to buy high and sell higher. So the stocks or I guess investments that we're looking at is typically stocks or indexes that are making new all-time highs, because it's showing you that there's a lot of power behind the move, and a lot of investors are aligned and supporting that move. So it would be the chart on the left-hand side, Rob.
On the other one, sorry, on the left-hand side.
Yeah. The only reason is because I'd focus on the weekly chart here, because we've actually broken out to new all-time highs.
Right.
And you can see that there, the 92.64. So it's been a very powerful move. We had that consolidation last week, and now it looks like we're ready to reaccelerate and go to the upside. So from our work, it suggests we have another week or two of upside pending. End of June, early July, it looks like it's time to take a break and a pause and, spend the time with your loved ones and take a step back from the markets.
What do you think that step back from the markets is going to look like? I know that's tough. On a technical side, what are your technical indicators looking like? So let's say we rally through here, the NASDAQ as an example. So we rally through to 10,000 and I don't know, maybe we get to 10.5 or something, or 10.2 or 10.3. Yeah. Do we retest kind of the 8,488 lows, or how far would the support have to, would we break through the first couple levels of support there?
Yeah, I think we'd probably come back to at least that 89.67, so around that 9,000 level. Notice we've played around that level a couple of times. It was resistance and then support. But yeah, if that fails, do you see that blue line, the blue solid line there? That's the 40-week moving average. You can kind of see it snaking. Yeah, exactly. You got it. That line. That will be the next major support. It's equivalent to the 200 days. So if any of your viewers are technically savvy, they'll know that's an important moving average that technical analysts use. And it's just an indicator of the longer-term trend. So if we break below 9,000, then we're definitely going to test the 200-day. And that's typically a logical bottoming point. So for instance, if you scroll down a little bit, Rob, if you take a look in May, July of 2019, and notice that's exactly it. But notice the blue line is right at that level. So you see how so that's like, and then notice again in October, November of 2019, we pulled back and we held right above that blue line, exactly right where you are.
Yeah, the moving day average, for those of you who don't know, I mean, the reason it smooths it out, right? Because you're taking 200 days or 40 weeks in your case, and you're smoothing out an average over an extended period of time. Support, resistance above those have always been technically strong signals. Can you touch on historically why in a technical analysis support becomes resistance and vice versa? And is that always the case? Breakthrough support, does it always become the next resistance?
Yeah, exactly. That's important because and I think we talked about this when we went through my last presentation, it was on the margin important, probably in the 80s and 90s. But what's happened is there's been a big shift. So in the 80s and 90s, what people followed more was fundamental analysis. And there was a lot of, for lack of a better word, they were telling stories about stocks, right? And then, they would say, this is what's going on, this is what's happening. And investors would gravitate to a stock based upon the story, which of course was backed up with fundamental analysis. And what I mean by that is, looking at price earnings or price book. But what's happened, especially since the late 90s, early 2000s, is you've had more and more investors that are focused on using mathematical models and quantitative models. And a big input into these models is technicals. So it's just previous resistance levels, previous support levels. And because of that, these technical levels are going to become more and more important going forward as well. And so these technical indicators, so like if a stock is trading below the 200-day moving average, you're going to have less investors in it if the stock was trading above the 200-day moving average. And the reason this is important is because at the margin, I'm sure you're aware of this, Rob, is that more and more money is being moved by quantitative and technical funds.
Well, you talked about it, what did you call it? The rise
of the machines.
The Terminator reference.
Yeah.